views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
And this is Don Bennett. Welcome. We are live today, and we have, two great guests that are coming on at 10:30 at the bottom of this hour. We've got Dr. Derek Scissors, and he is a resident scholar at the American Enterprise Institute. But he's going to be talking about this new Chinese infrastructure bank that I think is a very important discussion, because I think we're being left out of what I think is going to be the future, the geopolitical future of the world. So you want to stay tuned for that. And then at the bottom of my next hour at 11:33 a.m., I have a little bit of different guest. I've got Jeff Kemp. He's going to be here to talk about his new book, Facing the Blitz, 3 Strategies for Turning Trials into Triumphs. And this is basically life lessons from an NFL quarterback. So you want to stay tuned for that at 11:33. And actually, before I get started, I still want to remind everybody, I've got a seminar on Thursday, April the 2nd. That's this week. I think we are pretty close to being maximum capacity for the room, but I'm not certain about that. I think there are a couple of places left, and this is going to be a chicken, steak, seafood, vegetable dinner, whatever you want. It's at Capitol Grill in Chevy Chase, Maryland. And again, this is April the 2nd, 2015, Thursday. It's at 7 p.m. If you're interested in coming, give me a call at 866-286-2268. You need to RSVP. Again, that's 866-286-2268. And this is April the 2nd at the Capitol Grill in Chevy Chase, Maryland at 7 p.m. And it's a dinner. And we're going to be talking about, these surreal and sinister markets of 2015, because they are tough and they are hard to read, and there's a reason for that, because it isn't free market anymore. So you want to learn a little bit more and actually meet me personally, and I'd love to meet you. I love meeting the listeners of Financial Myth-Busting. Again, give me a call or leave a message at 866-286-2268, and one of my staff will give you a call back and get you situated for the dinner. And again, it would be great to meet you. In the meantime, before we get started, just want to remind everybody, we are live today. So if you have any questions, just don't hesitate to give us a call. We have a great show. We're going to be talking about, of course, what happened this week in the markets, which I think is a little crazy. And, these markets aren't easy to read. As a matter of fact, they're very difficult to read for obvious reasons. These markets feel like they're kind of falling apart, and or in a dead man's zone, however you want to call it. And, what I want to say about that is exactly gold and silver, the commodities, they're starting to run, and there's a reason for it. And I also want to point out, too, that the S&P 500 and the Dow are now in the red for 2015, and there's a reason for that. So before I jump into that, I'm just going to say this. March Madness, of course, is underway, and many consider March Madness to be, I think, the greatest spectacle in all of American sports. And this NCAA tournament seems to resonate far beyond other sports, because it seems to strike a chord with the average American. It's at the heart of, I think the thing that's at the heart of this basketball tournament is, of course, the American dream. And the American dream used to be equality and opportunity in order to reach the highest levels of social and economic achievement, right? Isn't that what it used to be? Or you may think it still is. Anyways, I guess you could say that March Madness embodies this ethos. But what's interesting to me is that every year this tournament shows up, it also brings with it the same question about the vast amount of money being made from this tournament and whether student athletes should get a cut. And again, this year, they did the same thing, but it came out with a bit of a new twist. I think the topics actually turned a bit, racial is the word. During an MSNBC show this past week about March Madness, they were talking about how college athletes do not get paid for their efforts and how much money is being made off the tournament. And there's a gentleman, Dave Zirin of Nation Magazine. He was on the show, and he said something fascinating. And I do want you to take a listen to this, because it's kind of incredible.
So, Dave, it is NCAA madness time, and part of that madness is $700 million coming in every year, and the players don't, as we've talked about before, don't actually make any kind of salary. What is the defense there?
I have no idea what their defense is at this point, other than them hiring lawyers who, by the way, aren't working for free, to go and argue that, no, the money has to stay away from the players' pockets. I mean, look, anyone who's watched the tournament this week knows what they saw. It's an incredible spectacle. It's absolutely narcotic. It's a national obsession. More people interact with the NCAA tournament than even the Super Bowl. More money is bet on the NCAA tournament than the Super Bowl. And who are we really tuning in to watch? Who is wearing the corporate logos as they run up and down the court? It's players. That's who we're watching, and yet they do not get paid for.
So he continues to go on, and I'm going to play this next part, and listen to what he calls this, an organized theft of black wealth. Take a listen.
We all become party to this kind of rank exploitation, Melissa. We become collectively corrupted, as myself included, as we watch this thing so assiduously. And I'll tell you what's so disturbing about it to me is that when you dispense with the niceties of it all, when we stop trying to speak in politically correct language, what we're looking at is the organized theft of black wealth. And if we want to talk about it more broadly, the organized theft of youth wealth. I mean, it really is like, imagine if we're watching The Facts of Life and only Mrs. Garrett's getting paid. I mean, this is what we're looking at, and we're all a party to this.
Organized theft of black wealth. What do you think? Now, Dave Zarin is the Nation's magazine sports editor, and is it true? What about non-black athletes? Are we stealing their wealth as well? And what about the black athletes? Are we stealing their wealth? Give me a call at 1-855-884-DAWN. Again, that's 1-855-884-3296. You know, almost all of these students are, in fact, receiving compensation, and almost all receive a full ride to whatever school they're attending. And that includes, of course, lodging and food and all sorts of types of perks. You know, this is also kind of the glamour of competing on a national stage and competing in a one-of-a-kind tournament. But, you know, is it fair? So absent paying football and basketball players a salary, what could be done? And are these collegiate athletes exploited in economic terms? Again, I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. 3296. And while I'm waiting for your calls, I'm actually going to talk again about the market. You know, like I said earlier, the Dow and the S&P 500 are in the red for 2015, and silver and gold are actually in the positive. I mean, silver year to date is up 8.10%. Not bad, right? And gold through Friday is also in the green. It's up 1.30%. So year to date, I guess you could say that domestic stocks aren't too happy, and the precious metals year to date are the ones doing the happy dance. So how can this be? Well, again, before I jump in and give you my 2 cents as to why I think this is happening, I want to focus on a statement made by the Atlanta Federal Reserve President, Dennis Lockhart, and he said it this past Thursday. Again, he said the economy is in solid shape to weather the upcoming turn to tightening monetary policy, unquote. So Lockhart actually said this at an investment education conference in Detroit. And this line of thinking appears to be common by a number of Federal Reserve members. But I would say this, if everything was really running smoothly, then why did the Atlanta Fed just forecast the GDP for first quarter of 2015 to be at 0.20%? That's right, 0.20% growth rate for the first quarter of 2015. This is the GDP, gross domestic product, for the United States. I mean, they were expecting only a few weeks ago 2.5% GDP. That's where they were pegging it, 2.5% for first quarter 2015. This is a nosedive of 2.3% in 2 weeks. So it looks like the reality of the weakening macroeconomic data is finally rearing its ugly head, isn't it? And you can start to see it in the Dow and the S&P, which is why they're in the red for 2015. Now, here's another example. The durable goods orders came out this week, and boy, did they drop. As a matter of fact, they're saying that this miss was the worst run since Lehman. So for the last 4 months, durable goods orders fell and missed expectations, which means the headline reporting for February 2015 new orders for durable goods not only indicated that the series effectively was locked into back-to-back quarterly contractions, but also, if this pattern continues, it's actually going to formally constitute that we are in a recession. That's right. So I'm guessing that our field of dreams economy, the one that they've been feeding us in the media, is more of a field of nightmares. And with that being said, I'm going to add this. One of the things everybody should probably know about me and my team at Bennett Group is we read a lot of research. I mean, not just our research, we read everybody's research. Things that go against us, our opinions, things that actually support our opinions. I think that's important. It makes you a better money manager. It makes you someone who can actually at least try to see where the trends are for the future. And that's why you go to an advisor, right? Not to do what's happened in the past, but to look into the future. And that's what makes you and gives you an edge in portfolio management. And I wanted to share with you that I'm not the only one saying this type of stuff. As a matter of fact, with that also being said, here are a few research pieces that I think you should try to read soon, which could probably help you understand why the U.S. stock market does feel like it's in a dead man zone. Now, the first one is a gentleman by the name of Henry Blodgett, and he's a money manager, and it's called The Current Boom Will Turn to Bust. Now, you can get this in Business Insider, but here's a little snippet from it. What he's saying is bubbles are rare, extreme events in which investment activity and valuations temporarily deviate wildly from historical trends, and then crash back down to the trend line in a colossal collapse. Booms, meanwhile, are far from common. They are also seen in ever-increasing investment activity and valuations, and they also end in a mean reversion bust. But the magnitude of the dime-a-dozen boom-bust cycle is nothing like the peak and valley that you experience in a bubble, and that's where we are today. Again, this came out by a gentleman by the name of Henry Blodgett, and that's something I want you to see if you can go and find. The title is The Current Boom Will Turn to Bust. Now, the second thing I want you to see if you can find is what I call my second read for you. It's called The Meaning of Liquidity, and it's by Howard Marks, and he is the head of Oak Tree Capital Research. And again, it's one of those pieces where he talks about the lack of liquidity we have here in our system. And as we head into break, when you come back, I'm going to give you more about what he had to say and a couple more reads for you to go out and find, because I am not the only one pointing out to you that this market, our U.S. market, is participating in somewhat in a dead man zone. It's not going anywhere, and there is a reason. Stay tuned. And this is Dawn Bennett with Financial Mythbusting. We're talking about how this field of dreams economy, I think, is more of a field of nightmares. And, instead of just giving you my thoughts and opinion for this particular show, I wanted to share other people and actually possible reads or research pieces you can go out and take a look at and give you a certain perspective. We come to our decisions at Bennett Group by not just our own research and what we look at, but also everybody else's. We try to get our hands on everybody's opinion. Those who support our ideas, those who don't support our ideas. We think that actually gives us an edge in portfolio management, and I think it will give you one as well. And before we went to break, I was talking about a gentleman by the name of Henry Blodgett, and he wrote a piece called The Current Boom Will Turn to Bust. You need to get that. It's in Business Insider, and I read a little bit of a snippet of that, but he's talking about how we're going into this bust boom cycle, and that we're soon to go from the boom to the bust. So again, for your portfolio protection, you do want to focus on that, as well as the second read I'm recommending is a title called The Meaning of Liquidity. And I've always said that, the most important investments are the ones that have the most liquidity behind it, not just domestic liquidity from here in the United States, not a promissory note from a bank or even a government. It's really what world liquidity is, what the world markets have interest in. And Howard Marks, he is of Oak Tree Capital Research. See if you can get some of his work. He did write this. Let me read a little bit of what he wrote in his last research piece. He said, sometimes people think of liquidity as the quality of something being readily saleable or marketable. For this, the key question is whether it's registered, publicly listed, and legal for sale to be public. Marketable securities are liquid in the sense you can buy or sell them in the public markets. Non-marketable securities include things like private placement and interest in private partnerships whose saleability is restricted and can require the qualification of buyers, documentation, and perhaps a time delay. But more importantly, the definition of liquidity is the one from, he said, Investopedia. And what he's saying is the degree to which an asset or security can be bought or sold in the market without affecting the asset's price. Now, why is this important? Because investments in this market really, truly need to be liquid so that you actually have a chance to be able to move out of it if these markets are going to do what a lot of these experts say it's going to do, which is fall. And it can't always be held up by how it's being held up right now, which is by central bank money or Federal Reserve money or the plunge protection team, however you want to call it. So again, you want to get that read because I think that one's important. Now, the third one is from Barclays Bank and Research. And they're basically saying it's about oil. They're saying the bottom's not in yet, which is important, again, because every time oil starts to drop, it does affect our economy. It affects all of our businesses, and not necessarily in a positive way. Now, Barclays actually sees prices bottoming somewhere in the mid-30s for West Texas Intermediate crude oil and in the low to mid-40s for Brent, and actually expects a further widening in the oil market contangos. Which means more expensive storage is going to be needed to incentivize. All this actually ends up being with more oil rigs are actually in the United States collapsing. And again, that's not a good thing for our economy. So you've got to ask yourself, why is the Dow and the S&P in the red year to date when the media and our own Federal Reserve is telling us everything is solid. And, even, the Federal Reserve members are saying that we have a solid shape to our economy. I just don't see it, because if that really were the case, then I think these markets would be running hard. And I don't think silver would be up 8% year to date. And I don't think gold would be up 1.30% year to date. So apart from that, I guess everything is really still awesome, according to the headlines. And that was just my tongue-in-cheek comment. But, back to, again, what we're talking about, which is March Madness, and we're talking about the fact that a lot of people believe that athletes should be paid. And so do you believe that football and basketball players deserve a salary? I mean, what is to be done about this? Are the leading collegiate athletes exploited in economic terms? I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. I mean, all of these athletes primarily come from a low-income minority family. And, these players actually help generate the revenues for colleges and universities, and they use this money to help run the schools, takes care of its expenses and overhead. So I'm just wondering, why not pay our players something? Maybe pay them in the same way that non-athlete students are paid, as a part of a work study. That's just a way to get around it so they can earn a little bit more money and actually share in part of what they're bringing into the school. And I guess that begs the next question, are university athletes employees? Again, I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. Here's a thought. If we want to preserve the educational model of intercollegiate athletes in a more attractive way, maybe we should just take the definition of amateurism away from its current arbitrary, hypocritical, and morphing state, which it really is because it brings in so much money, and follow the lead of the AAU and other amateur organizations. Honestly, the working definition should be simple. An amateur athlete is one who is not paid a salary for playing his or her sport. Do you agree? Make sure you stay tuned because we've got Dr. Derek Scissors next.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
And Dr. Derek Scissors is here. Scissors is a resident scholar at the American Enterprise Institute, AEI, where he is an expert in Asian economic issues and trends. Now, he publishes AEI's China's Global Investment Tracker, which follows large Chinese investments, excluding bonds, around the world. And the leading recipient of these kinds of investments so far is the United States, which has received almost $78 billion between January 2005 and December 2014. Now, that's interesting. And this is why I have Derek here today, as China has just set up or established the Asian Infrastructure Investment Bank, also referred to as AIIB. And it is seen as a a rival organization to the World Bank and Asian Development Bank, which are dominated by the United States, Europe, and Japan. And this is where I want to start today. Derek, welcome to Financial Myth-Busting.
Thanks for having me.
So the World Bank and the Asian Development Bank is at the behest of the old Bretton Woods order. Does that mean that AIIB will dance to China's and Russia's tune instead?
Well, it won't dance to Russia's. Russia's a minor financial player and have a very struggling economy. I do think the AIIB will dance to China's tune. I don't think that's much of a change over the situation we had before. Prior to this, China had a very large bank called China Development Bank doing most of these loans. Certainly, it's an arm of the Chinese government. So China Development Bank obviously danced to China's tune, and now we're calling it Asia Infrastructure Investment Bank. Name change, not a change on the ground.
But the geopolitical importance was pretty apparent immediately by the U.S.'s negative reaction when the U.K. announced they're actually going to join the AIIB. So does this mean, from a geopolitical point of view, that China and Russia have now completely outmaneuvered the United States?
Well, I do think the American reaction was a mistake.
Feedback.
Being built, if you're talking about Chinese influence in these countries, none of that's going to change. That was already happening. China Development Bank, for example, had loaned more money to African states than the World Bank had. So we were already seeing this Chinese financial influence spread around the world, and the U.S. is acting like this is a big deal and getting into a tiff with its allies for no reason. Mm-hmm. So I do think that there was a mistake here made by the United States, and the mistake was treating the Asia Infrastructure Bank as if it's important. The important thing already happened, which is China has a lot of money and it's spending it. We need a strategy to counter that.
So our allies are joining this bank. I'm just wondering if creating this AIIB is actually a masterstroke of tactical genius. Is this the beginning of the end of the United States dollar's denomination?
No, those are two really different issues. I do think it was a smart move by the Chinese because they're rebranding something that they were doing already. It's like you have a business, and the business, it's doing well, it's active all over the world, but you have a brand name that people don't like, and you just change the name, and suddenly everybody else wants to join in your product and co-produce with you and license things with you. That's what happened with the AIIB. It's still Chinese money doing what it was doing before, but now everyone wants to join in because it says Asia instead of China. So I think that's clever. But with regard to the U.S. dollar's dominance, AIIB is going to be lending in dollars. The Chinese currency, the renminbi, is actually a derivative of the dollar. It's pegged to the dollar. So two different things here. U.S. diplomacy has suffered a setback, and will suffer more setbacks unless we think about what to do about Chinese money. But the Chinese actually use dollars, so the dollar remains king.
But the Obama administration made a big point about asking our allies not to join this bank, which at least it feels like it's to me that he thinks or they think that it's a threat to the United States-led institutions like the World Bank and the IMF. Do you think the Obama administration is actually overreacting?
Oh, I definitely think they are. As I said, China was already acting on its own outside of current institutions. I'm not a huge fan of the IMF and the World Bank. It doesn't really bother me that they have a competitor. I prefer it not to be a Chinese competitor, but it is what it is. This was already occurring. So the Obama administration threatening our allies or pressuring them or publicly rebuking them doesn't make any sense. All it does is it takes a move by China to rebrand their organization, and we sort of give them what they want by looking silly, essentially. But Britain, a very close ally, Australia, another close ally, seem to be defying us. So we turn this into a loss of diplomatic influence that wasn't necessary.
So do you think our administration has actually lost its ability to lead, or do you think their case just isn't as compelling?
I don't know why we did this, and I'm in Washington, based in Washington, working on China all the time. It's not like I shouldn't be aware of the reasons. It doesn't make any sense, and a lot of people think it doesn't make any sense. Because I think it's a fairly minor issue, the administration certainly has a chance to recover. I'll give you an example. If we can get a good, and that's important, Trans-Pacific Partnership Agreement, that's much more important in Asia than the Asia Infrastructure Investment Bank. But they have to be able to deliver. I think right now there's some doubts about the Obama administration's perceptiveness and its credibility. They need something to counter that.
So do you see the AIIB as the anti-dollar alliance?
No. Again, they're using dollars. I see the AIIB as the tool of China to the same kind of tool it had before, where it's trying to enhance its diplomatic influence. It's trying to maybe weaken the ties among U.S. allies, but it's a diplomatic tool. It's not a financial tool. Financially, the dollar is still in charge because the Chinese are afraid to move off the dollar standard. They're not afraid, however, to try to poke at the U.S., and they're doing that, and we're not responding very well.
But doesn't this say that the world's changing, that, again, maybe they use the dollar now, but they've set up an infrastructure for them to use the renminbi or the yuan in the future?
They have, and they lack the nerve to use it. I mean, let's not forget, we're not the only ones with political leaders who don't necessarily do the thing they're supposed to do. The Chinese have accumulated a huge pile of dollars because they've been afraid to make the renminbi an international currency. Well, you know what happens when you have a huge pile of one kind of asset. You don't want that asset to disappear as in importance. So they now have a stake in keeping the dollar on top. I've said this, I used this line before, the biggest seller of dollars is the Federal Reserve, undermining the dollar. The biggest buyer of dollars, supporting the dollar, is the People's Bank of China. So, the Chinese do have the infrastructure in place for the renminbi to challenge the dollar, but they're afraid to pull the trigger. So
you run something at AEI called the China Investment Tracker, and it follows major investments that China's making abroad. The United States is the biggest recipient of this. Now, this is minus bonds, right? So why is tracking how China invests important to our listeners?
Well, I mean, if you're selling something, the Chinese might want to buy it. So the U.S. is the number one recipient for Chinese bond investment, too, and we all knew that. But the Chinese put out numbers, and your listeners have probably heard this before, that aren't reliable. And there are numbers on their investment outside of bonds is not at all reliable, which is why I started following it independently. So we've had a surge of Chinese investment in the U.S. in the last 3 years, record after record in terms of annual investment. They're buying up especially American property, but they're also interested in agriculture. They're interested in energy. And there are two elements of this. There's the positive element, which is if you have an asset, it's always good to have another buyer, and the Chinese are another buyer, buying real estate in Los Angeles and San Francisco.
You got to wonder if this is like the 1980s all over again. You remember when Japan was buying up all of our assets, but instead it's China. Should we worry about that?
Well, I think, the 1980s had two lessons. One is countries go crazy and buy American assets, and then they end up blowing a lot of their money, and I think that's what China's doing, as Japan did. On the other hand, Japan is a treaty ally of the United States, and China certainly is not. So we need a mechanism to make sure they're not buying technology out of Silicon Valley or elsewhere that we don't want them to have. And that's the mechanism we use right now is called the Committee on Foreign Investment in the United States. It's a government mechanism. We need to make sure that CFIUS is doing its job, because this increasing rush of Chinese investment could hide some smaller investments where they're trying to buy technology we don't want to sell to them.
When the Chinese firm actually bought the iconic Waldorf Astoria, in one of your pieces, you said this really isn't something we should be freaking out about. I want to know why not. Because they overpaid, for one thing, and second, there's no real strategic gain to this. If the Chinese want to buy hotels in major U.S. cities or overpay for people's properties, fine, let them. It benefits Americans. We believe in a free market economy. You have a buyer, you have a seller, they obey the law, that's fine. I think what we work on is not selling technology, as I said before, and then making sure after they come here that the Chinese have to obey the law. So the things I worry about are not the Waldorf Astoria. The things I worry about are Chinese accounting standards. The SEC is investigating the big four accounting firms for their China operations because they don't disclose properly, and they say the Chinese make them. It's Chinese law that makes them not disclose properly. That's unacceptable. When you come here as a foreign investor, you have to obey American law. So that's the kind of thing I worry about, rather than, hey, they paid an extra $100 million for the Waldorf Astoria. Well, because so much money of their personal money is actually coming into the United States, do you think they're going to get away with being able to break the law? Because we need it here in our economy?
I do worry about that. I mean, you got to remember that most of the investment is by either state-owned enterprises or private enterprises who are run by Communist Party members. They're not used to the rule of law at all. Even if their intentions aren't malign, if they're not thinking about harming the U.S., they don't really know how to behave here. And so I would expect a lot of either law breaking or law tempting, if you will, activities, and we have to be ready for that. In Washington, I don't see it. I see people either worried about the technology, which I understand, or having knee-jerk anti-China reactions that involve, violating free market principles, which I oppose. I don't see people thinking we're going to have a lot of Chinese presence here. When we've had a Japanese presence here, Japan comes from a society with a rule of law. China doesn't. We're going to have problems with Chinese firms and individuals breaking the law. What are we going to do about it?
Overall, you sound pretty bearish on China. I'm just wondering if the rise of this Middle Kingdom, which listeners, you need to know that's how they refer to themselves, the Middle Kingdom, has it already passed its apex? And what are the biggest headwinds you actually see threatening its economic growth, which seems to be so much greater than ours?
Yeah, I do think it has. I am a China bear. I thought in 2009 when they engaged in the world's biggest stimulus by ordering their banks are arms of the government, they can order them to do things, ordering their banks to loan money even though the economic environment was weakening, I thought it was a terrible mistake. And it's gotten them into the trouble that you'd expect. I'll just give you a number. The U.S. cumulative American government, national government deficits 2009 to 2014 is $6.3 trillion, which is a lot. McKinsey, so this isn't me, McKinsey thinks that from 2007 to 2014, which is 2 years longer, the Chinese added $20 trillion in debt, more than 3 times what we added. So their biggest problem, which sounds strange because they have so much money to invest overseas,
right,
is domestic debt. And there's no way to avoid that. Europe can't avoid it, Japan can't avoid it, we can't avoid it, China can't either. It's going to be an anchor around their neck for years, maybe decades, because there's so much of it. And, the Chinese will lie about their economic statistics, and they'll report anything they want. But when a bullish outlet like McKinsey, which tries to sell things, says $20 trillion in new debt, that's a sign that China's in a lot of trouble.
Are you talking in terms of the shadow banking system over there?
That's a good question. The official debt is more like $8 trillion, which is already huge. And so McKinsey is trying to get an assessment, others are too, of how much unofficial debt is being accumulated, and they came up with another $11 trillion. That may be too high, but even if China's only added $15 trillion over this period, it's much too much for any economy, even ours, and certainly theirs, to absorb. You add that to the fact that China is also, because of the one-child policy, going to become a rapidly aging country very soon.
Right.
It hasn't already. When you have an aging society and a lot of debt, what you look like is Japan. And Japan has seen essentially no growth for 25 years. That's what I think is in China's future.
Last year, I think they bailed out some of these loans without letting them default. They seem to be following our route and doing that. Can they continue to do that? Since they're such a closed, at this point, they still are a closed economy.
You can't send money freely out of the country. That's the big thing.
Yeah.
And so everybody's savings deposits who doesn't get around the law some way because of political influence or illegal activity, everybody's savings deposits is hostage. You think it's your money, but if the bank needs it just sends it someplace else.
What about Alibaba? The company that went public this past year here in the United States, was that their way of trying to be more open and more disclose, more open about their accounting, more open about their business practices and their goals?
I'll tell you my somewhat paranoid view, or it's not really paranoid, my cynical view of what Alibaba is doing. I think Alibaba, which makes money on the web,
right,
realizes it doesn't want to be based in China, which has a very, a love-hate, mostly hate relationship with the web because it allows the free flow of information. And so I think Alibaba, as much as it makes money on China and it does most of its business in China still, was looking to move a lot of its operations elsewhere, and that's why it listed in the U.S. Because if you're a web company, you'd much rather be exposed to the United States than exposed to China. And that's my view of that. It's not that they were trying to be good citizens, as they were trying to protect themselves against the Chinese government.
So you think going public here gave them the liquidity to diversify outside of China?
Exactly, and it gives them an area of operations that's not subject to interference by Chinese authorities.
Derek, as we head into break, I want you to think about this. How do Americans view China? And we'll talk more about that when we get back. Financial Myth-Busting, and we are here with Dr. Derek Scissors. He's the resident scholar at the American Enterprise Institute and the author of the book, The China Global Investment Tracker. Actually, it's not the book. It's a research. Before we went to break, Derek, I asked you, what do you think the average American out there views China? Is it an enemy to them? Is it an economic competitor to them? Is it merely a trading partner? And you know what? Derek just fell off the line. But before we went to break, actually, I was asking Derek, and we're getting him back right now, what he actually thinks about the average American and what they think about China. Hi, Derek. Are you back? Derek? We have a bad connection. Anyways, I'm really interested in this. I mean, is China an economic competitor to us, or is it merely a trading partner? I really do wonder what the Chinese person actually thinks about America today, because they are growing so fast economically. They're getting wealth back that they didn't have for the last 10 or 15 years. I do think that it could be an amazing partner for us. I'm just wondering what the average American actually thinks about that. Derek, before you fell off, and now you're back again, welcome. I was asking you, what do you think the average American views China as? Is it an enemy? Is it an economic competitor? Is it merely just a trading partner? Or actually, what's the flip side of that? What does the average Chinese person think about America?
Okay, sorry about the technical problems.
That's okay.
The average American probably, my sense of this is they're disquieted. It's a little nerve-wracking to have China seem to be growing rapidly all the time. They don't pay attention to every little detail like McKinsey reports and Chinese demographics, so they're still thinking that China is this rising power, and it's a single-party state run by a communist party. So it makes them nervous, but it's also, we're not in a conflict with China. China's not beheading people. China's not invading Ukraine. So I don't think China is nearly at the level of an Iran or a Russia or a non-governmental organization like ISIS. I think it's something that makes Americans nervous. On the other hand, they probably know some Chinese, not just Chinese Americans, but actual Chinese. There are a lot of Chinese in the U.S. studying or doing business, and that's probably a positive. So I think there are mixed feelings, and the predominant one is kind of a mild nervousness.
Again, what's the flip side to that? How do you think the average Chinese person thinks about Americans?
Well, in the same way that the average American doesn't spend that much time thinking about China, the average Chinese is a very big country. You're in inland China. You're not thinking about the U.S. that much. I think most Chinese still think of America as someplace they'd want to go see and visit and maybe live, because living standards here are so much better than they are there. And I think something that a lot of Americans don't know, that the average American makes about 13 times as much every year as the average Chinese. That's a big gap, and I think the number one thing Chinese think about America is it's called in Chinese Meiguo, a beautiful country. They think America would be a wonderful place to visit and perhaps live.
So there's a paranoid theory out there that China wants to overtake the U.S. And part of that strategy, of course, is one day dumping treasuries, U.S. treasuries that they own on the market for nothing, perhaps leading to a collapse of the dollar. Do you agree with that?
Well, it won't work. The famous line, if you owe the bank $1,000, you have a problem. If you owe the bank $1 million, they have a problem. You can't. It's easier to talk about dumping treasuries than actually doing it. Yeah, if you're a seller, if China decides for some reason it's going to try to sell all of its treasuries, you have to have a buyer. And there's only one buyer that's going to come in and buy it near face value, because there's only one buyer that has enough money, and that's the Federal Reserve. So, who are they going to sell to is the question. And the funny thing is, anyone who would buy them would pay them back in dollar assets. They would just be swapping treasury bonds for other kinds of dollars, because there aren't enough the other currencies aren't big enough in the world, and the euro is actually getting worse. So they're stuck. They can try to sell treasuries, can put pressure on our bond market for a couple of weeks, but the only thing that comes out of that is the Chinese have to write down the value of their treasuries, because they'd have to sell at a discount.
They've engaged in a lot of bilateral agreements, even with their own allies, about getting these different countries to do more trade in renminbi and yuan. So do you think that actually is going to affect us?
Not going to. I mean, all of this, we're going to hear this, for listeners who pay attention to this sort of thing. The IMF's going to meet next week, and they're going to make a big fuss about adding the renminbi to the list of reserve currencies, which is now the dollar, the euro, the yen, and the pound sterling. And that sounds like it's important, and these currency swaps you mentioned with our allies sound they're important. They're not. The only thing that matters right now is the renminbi is still pegged to the dollar. The difference between the renminbi's value against all other currencies and the dollar's value against all other currencies last year was a total of 2%. And that's because the Chinese are afraid to have their own currency, so they use ours. As long as they're afraid to have their own currency, they're afraid to have the speculation, the rises and the falls in their currency, all the rest of this stuff doesn't matter. What the U.S. has to watch for is that moment where the Chinese actually get their nerve up and say, all
Derek,
right,
we're going into break. I want to thank you so much. That was Derek Scissors, resident scholar.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
And we are live today. Welcome to Financial Myth-Busting. We had a great first hour. We had Dr. Derek Scissors on. So if you didn't catch that interview, you want to go to financialmythbusting.com and catch it. Tomorrow we'll have it up. But he talked about, is the sun setting on the West? And this is about China, and this is about China's new infrastructure bank that they're setting up, that even our allies are joining. And I'm wondering if that's actually going to hurt the World Bank and the Asian Development Bank, which has been in place for a long time, which is very supportive of Europe, Japan, and the United States in our economic policies. So that'll be interesting to see how that grows. As well as at the bottom of this hour, we're going to have Jeff Kemp. Now, he's the former NFL quarterback and author of the new book, Facing the Blitz, 3 Strategies for Turning Trials into Triumphs. And he's going to actually talk to us about how to think like an NFL quarterback to help us overcome personal and professional obstacles. So this is going to be life lessons from an NFL quarterback, Jeff Kemp. So that's going to be at 11:33 at the bottom of the hour. And just make sure you stay tuned for that, because that ought to be very interesting. You know, one last piece before I jump into what I saw this past week in the market, which was very fascinating, as well as talking about March Madness and should we be paying our athletes, because it does bring in a lot of money to these universities and to the NCAA, is we still have that seminar I've told you throughout the month. It's on April the 2nd, 2015, Thursday at 7 p.m. at the Capitol Grill. It's in Chevy Chase, Maryland, and make sure you RSVP. We're going to be talking about the surreal and sinister markets of 2015, my team and I at Bennett Group Financial Services, and this is a chicken, steak, seafood, vegetable dinner, whatever you're into, but I'd love to have you come. I think we have a couple of seats left. Otherwise, the room is actually fully booked, but if you can make it, and if the room isn't fully booked, actually, I said before, give us a call at 866-286-2268. That's 866-286-2268. It would be great to see you and meet you. I have so many wonderful listeners that call in and write and even call me during the week and let me know what their thoughts are about the marketplace and the United States economy and the policies that affect it. And that's what we're here for. You know, before I jump into, again, what I saw this week, which is the Dow and the S&P stalling out. They're in red for 2015. And that silver is actually turning into the green, the biggest return for the year. It's up 8.10% year to date, and gold is also in the green. It's up 1.30%. I'm actually going into depth. I'm going to dive deep and try to figure out why that's going on and give you some hints. But I do want to talk about March Madness and, you know, this American dream that it embodies, which is to, you know, bring out equality and opportunity for all students and all athletes and all Americans to reach the highest levels of social and economic achievement. But part of this is a question, because it brings in so much money, you know, should student athletes actually get a cut of that money that it's bringing in? And I want to hear from you. I'm at 1-855-884-3296. And again, that's 1-855-884-DAWN. What do you think? I mean, should athletes get paid? You know, Obama was asked about his opinion on this, and he says he believes paying collegiate athletes is wrong. He's opposed to paying students, but he also said they deserve to be taken better care of. And actually, I agree with him. I mean, I think that all their scholarships should be guaranteed because, you know, these athletes, they work hard, they play hard, and some of them get hurt. And I don't know if you know this, the moment they get hurt and they can't play for the university, their scholarships are canceled. So that is one thought, then again, that I support actually Obama on that particular thought. Don't be surprised. I think is reasonable and it's fair. Like I said before we went into break, I do think that we need to take the definition of amateurism away from its current arbitrary, hypocritical, which I think it is, morphing state imposed by the NCAA, and maybe take the lead of the AAU and other amateur organizations. I mean, the working definition should be simple. An amateur athlete is one who is not paid a salary for playing his or her sport. So maybe a college athlete could actually continue to receive the considerable benefit of a tax-free athletic scholarship and, in addition, earn outside income from his or her publicity rights. Now, a college athlete could sign with a lawyer or an agent and enter a professional sports draft and actually maybe start earning money off of their image. It's a marketing thing, but in a different way. I realize this is going to get complicated and you're going to have to dive into the laws and rules and regulations about this, but it could be a way to take care of this issue. Or why not pay our players in the same way many non-athlete students actually are paid as a part of work study? That's a possibility. So, which begs the next question, are university athletes employees and should they be treated that way? I mean, first, college athletes, have been paid since the 19th century in different ways. Some are paid cash under the table, some are paid in goods and services, and the vast majority are paid in scholarships. So when the NCAA was formed in December of 1905, the clear policy was that student athletes were to remain amateurs. That means any inducements to attend a school based on their athletic skill were prohibited. There was no ambiguity, and this policy did not allow scholarships based on anything else but their athleticism. So I can barely say that word today. Anyways, the issue at hand is really not whether or not college athletes should be paid, but whether they should be paid a salary. And I want to hear from you. Again, I'm at 1-855-884-3296. And again, that's 1-855-884-DAWN. So while I'm waiting for your calls, I want to talk about why the Dow and the S&P are in the red for the 2015. Why is silver in the positive at positive 8.10% year to date? It's telling you something. Why is gold in the green and being at a positive 1.30% year to date? It's just that U.S. equities are struggling. We've talked about how their earning levels are very poor. Maybe it's starting to show up. I mean, some people out there might say a lot of things are struggling to find direction. The U.S. dollar is dropping. Oil is still down. Stocks, again, are basically going nowhere. They're in a dead man zone. And the U.S. macro data is coming in across the board weaker and weaker and weaker. But this also means that traders and investors can't figure out what's going on with the economy and U.S. businesses. So they have essentially sidelined themselves. That's really what I think. And I would even argue Janet Yellen is actually starting to see this. Now, Janet Yellen, of course, is the chairwoman of the Federal Reserve, and she was at a conference this past week. It was called the New Normal Monetary Policy Research Conference, which was sponsored by the Federal Reserve Bank of San Francisco. And during the question and answer period, she actually admitted something which I found astonishing. And she said that cash is not a store of value. I want you to take a listen to this.
The Swiss, the ECB, Denmark, and a few others.
Well, I mean, it really is interesting to see these European countries move to negative interest rates. And in a way, I'm surprised that there hasn't been more pickup in the demand for cash. Cash is not a very convenient store of value, but at a minus 75 basis point interest rate, I would have thought that maybe there would be some movement.
Now, is that the reason why silver is up 8% year to date? Because silver actually represents a better store of value. And is that the reason why gold is up 1.30%? Because gold actually represents a better store of value. I mean, I said I was astonished that she said it. I almost wonder if it was accidental or if, in fact, it was a hint. Either way, it was the exact same thing that Alan Greenspan alluded to just a while back. And we talked about this on the show. And then after he said that, the dollar is not, or cash or fiat currency is not a store of value, he went on to say that gold is a currency. It is still, by all evidence, a premier currency. No fiat currency, including the dollar, can match it. And that's what we're seeing in the numbers so far year to date through last Friday. So if, according to Yellen, cash is not a convenient store of value, then What is? Well, I hate to sound like a broken record, but maybe, just maybe, the reason gold and silver are positive again year to date and the equity markets are negative year to date is because silver and gold are the real convenience store of value. And that the rising price of gold and silver are sending us a sign of what is to come. And, again, I keep coming back to this. I'm not the only one who's saying this. There was a recent report that actually was issued by Goldman Sachs. They have an analyst in the metals and mining team in London, the Goldman Sachs metals and mining team in London. And the gentleman's name is Eugene King. And he actually came out and said the world's going to be facing a commodity scarcity. And that, quote, our research shows that there are only 20 years of known mineable reserves of gold. Now, that's amazing. Is that the reason why, again, gold and silver are running up? Maybe it is a convenience store of value, but also maybe it's the fact that there's a scarcity that we're heading onto. Now, he went on to write, the combination of very low concentrations of metals in the Earth's crust and very few high-quality deposits means some things are truly scarce. Perhaps unsurprisingly, these are the so-called precious metals, and that their value is derived from the fact that they are rare. Their relative scarcity and the market's belief that new discoveries will be limited is what drives the price of these super rare commodities. So, he finished off by saying gold has been used as a measure of wealth for more than 4,000 years, as the ancient Egyptians soon worked out that gold was not only shiny and heavy, but very rare and valuable. If Goldman Sachs' Eugene King is correct, then what he is saying would even be more true if the economic systems around the world became weaker, and with that a complete rejection of central bank policies, fiat currencies would actually force money into gold and silver. And again, I keep coming back to this. Is this the reason why gold and silver are up year to date and the Dow and the S&P are negative? Are we finally seeing that the truth is showing up in the marketplace? And that's a question I had this week. You might have had the same. So if you have any questions regarding your portfolio, remember, I've been at this for 30 years. Give me a call. I'm at 1-855-884-3296, and that's 1-855-884-3296. So back to the question of, should NCAA athletes be paid? I mean, again, there should be, I think there's other reasons why we should be very cautious, again, before paying athletes a salary. And one of the reasons is I think it's going to actually be a financial drain to the academic culture. We don't use, I think it's going to be very disruptive to the academic culture. I think it's going to be financial drain to the schools. We don't use the market system to allocate resources when the universities. So, again, I don't think that it may be smart for them to do it. I do think, however, they need to get more guarantees. And Obama actually said the same thing. I just wonder, should NCAA athletes be paid? So I want to hear from you. 1-855-884-3296. And this is Dawn Bennett with Financial Myth Busting. We're back. We're talking about how the NCAA basketball tournaments, or March Madness, have become a huge business. And CBS and Turner Broadcasting actually make more than $1 billion off the games, thanks in part to about $700,000 in ad rates for 30-second spots during the Final Four. But the question is, should NCAA athletes actually get a cut from this? None of the players actually see any of that money. Even as they risk career-ending injuries every time they step into the court, field or rink. For example, just last weekend, Louisville's Kevin Ware actually suffered a pretty gruesome broken leg. Now, they're saying he's actually going to be able to come back and play eventually, but every athlete knows that every time you damage yourself, you come back, but you come back differently, and you may not come back 100%. So the huge amount of money that's being made off of college sports has led some to question whether student athletes can be considered amateurs any longer, and whether they should instead be paid for their efforts. And I wonder the same thing. So I'm asking you, should NCAA athletes be paid? Did you ever compete in a college sport? What are your feelings about this? I mean, do you think, again, that athletes should be paid? Give me a call at 1-855-884-3296. Again, that's 1-855-884-3296. Here's another interesting twist to this. I was thinking about this and doing some research. During the football season, the NLRB, that's the National Labor Relations Board, they actually ruled that student athletes at Northwestern who were petitioning to unionize can actually, in fact, unionize. So what comes next? Strikes? Debates over minimum salary? Maximum allowable training hours? I was never an athlete in college, but I was one leading into it. And as a swimmer, I just never thought as an amateur you could actually get paid. But I do see the value of maybe getting a guaranteed scholarship. That would certainly be different because, as these athletes, if they get hurt and they can't go back to their sport, that means they've lost their scholarship. That just doesn't seem to be fair or right since these schools and these networks are actually making so much money off of this. So, again, the NCAA tournament is so exciting because of the games being played on the court, but also off the court again. The one off the court is the one on the court are unpredictable, but so is this one. I mean, again, should we be paying college athletes for their work during the season? I mean, this topic continues to come up every year, and I don't know what the answer should be. Should it be yes or should it be no? I want to hear from you. I'm at 1-855-884-DAWN. Again, that's 1-855-884-3296. There's a big part of me that actually thinks that no way should college athletes be paid to play. They are students first and then athletes second. And those who actually take school seriously have the chance to get a good education, even if it takes extra work to focus on class when they're done with games and practices. But I also think that getting paid to play at college would, might work if it actually comes in a guarantee to the scholarship. And I think it would encourage high school students to seek sports scholarships then. And I think that that's important. So can NCAA schools afford to pay college athletes? Actually, NCAA spokeswoman Megan Durham, she had an important quote this week. She said that only 20 of the roughly 1,100 schools that constitute the NCAA make more from sports than they spend on sports, according to the association's most recent estimate. So that's a very interesting number, that so many athletic programs are struggling just to break even. It seems to me then that would make this discussion actually a non-starter out of all the ethical and legal arguments surrounding the issue. Why waste your breath on such questions when the school can't even afford to pay the players if they wanted to? But they can guarantee the scholarships, and I think that that's important for us to consider. And again, this is the same concern voiced by President Obama. He actually sat down with an interview with Huffington Post last week, and he expressed some frustration with the way universities treat students and athletes, suggesting that the universities guarantee a 4-year athletic scholarship for the students in good standing, and I would agree with that. Again, I don't know about paying athletes. In my opinion, that would actually lead to somewhat of a bidding war out there, and maybe it would even ruin the sense of college sport, which I think is important. Sports programs at smaller colleges, too, might be affected by this. They have a tighter budget than the big-name schools, and they may not have the resources to shift to pay over these student athletes, even if it were legal. And, of course, that could hurt them in recruiting efforts. So it really would unbalance the table. So, again, do you think we should be paying our athletes? Our collegiate athletes? I don't know what the answer is. Part of me says no, part of me says yes, but maybe it should come in a form not necessarily as a salary, but in a guarantee of scholarship so that they can be there first as a student and second as an athlete. As we head into break, I'm going to remind everybody we're going to have a great athlete at the bottom of the hour. It's going to be Jeff Kemp, so you want to stay tuned for that at 11:33. He's going to be talking about the life lessons from the NFL.
The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions. Securities offered through Western International Securities Incorporated. Member FINRA SIPC. This is Financial Myth-Busting with Don Bennett, where politics and the economy intersect.
Jeff Kemp is here. Jeff entered the NFL as a free agent quarterback in 1981 and played 11 seasons with the Rams, 49ers, Seahawks, and Eagles. Now, his best seasons were in 1984 when he quarterbacked the Rams and led them to the playoffs in 1986. And then he actually threw 11 touchdowns for the 49ers in 6 games. Kemp is the author of a new book, Facing the Blitz, 3 Strategies for Turning Trials into Triumphs, which is somewhat of a tutelage to teach you to think like an NFL quarterback. Because he feels this can help you overcome personal and professional obstacles, and that's where I want to start today. Jeff, welcome to Financial Myth-Busting.
Thanks, John. It's good to be with you.
So I'm going to actually carry over from a conversation we were having before we came to you. I want to know, do you think NCAA athletes should be paid?
No, I don't think they should be paid in the sense of a salary. A basic stipend recognizing that they spend, 60 or 70 hours a week on their sport, and then they're supposed to do classes, might not be a problem. Something that makes sure that they're not looking for a little cash on the side from selling tickets or paraphernalia, that might be reasonable. But paying them, that doesn't make sense, and I'm not in favor of that.
What do you think about a guarantee on their scholarship?
That's interesting. They're taking a lot of physical risk for the school. Not a bad thought. I mean, the emphasis ought to be on the education anyway. But then again, I'm not a fan of the way players leave school after 1 year of school to go into the pros. It'd be nice if the NBA waited and the NFL as well.
So you graduated from Dartmouth. That's not a football school. That's an ice hockey school. How did you get into the NFL? That's a big leap for me.
Yeah, it's funny. I did an interview with one of the Wall Street banks when I was at Dartmouth my senior year, and they were telling me about the commitment it takes to succeed on Wall Street, the 100-hour weeks and stuff. And they said, Mr. Kemp, you're absolutely dedicated to this. Is this the number one thing you'd like to do more than anything else? I said, it'd be great, but actually I'd rather play pro football. And they said, thank you very much. That'll end the interview. So I wasn't quite the dedicated prospect they were hoping for. But no, not many guys go to the NFL from Dartmouth. But then again, my dad had played pro football, and I kind of had that in my mind my whole life, even though I really wasn't that good a prospect. I was a decent college quarterback, but I wasn't a great one. So I look back on it and I say, wow, God opened the doors. I'm pretty humbled and blessed that I got there. I worked really hard, but there were people that got hurt during the year I was with the Rams that allowed me the chance to show them that I could play, and then I made the team. I kind of started at the very bottom.
Your new book, Facing the Blitz, 3 Strategies for Turning Trials into Triumphs, is about using your quarterback skills, your NFL quarterback skills, or let me just say charisma, to work in the both personal and professional life. I mean, do you believe that your charisma or quarterback charisma, or whatever you want to call it, can disarm people and open up their willingness to get anything done?
No, not really. I don't think it's the quarterback and charisma that's the key to this book. This book has a couple key stories from my life in football. One metaphor of a Monday night football game where the blitz was hitting me and the offense real aggressively, and in the next couple of moments I knew that either something really bad, like a fumble or interception or a sack would happen, or something really good. Because in the blitz, there's a great opportunity. It's man-to-man coverage. The defense doesn't cover the whole field as well. And many of the biggest players in football, the greatest scorers, come on the blitz. And we, in fact, scored our only touchdown of the game on a play where I ended up on my back and a receiver ended up with the ball in the end zone. And we won the game 13-6. So the message is that life is going to blitz you. Tough things are going to happen. It's going to happen to all of us. But if we have the right ideas, perspective, attitude, we take the right strategies, then we can overcome them and actually turn those negatives into positives. But I don't think it's due to charisma. It's kind of due to these strategies that are available to all of us. Take a long-term view, be willing to change and humble yourself and mature, become more other-centered, less selfish, more team-oriented, less Lone Ranger. And then finally, take your eyes off yourself and focus on bringing up the best in others. Serve someone else. When you're hurting, find someone else who's hurting even more and serve them, and it'll pull you out of your pit as a victim. And you may find that the business that fails becomes the seed for a much better business in the future. The cancer you go through becomes the preparation for having a ministry to help other people that have cancer.
Yeah. You know, there's certainly no shortage of hardship in today's economy, especially here in the United States. And people are really finding it difficult to simply find a mildly satisfying occupation that actually enables them to provide for a family. For those struggling with money issues, how can some of your tactics actually be helpful?
Well, the long-term view is key. If you have a long-term view on life, then you're going to be thinking about your kids and their college. You're not going to be thinking about the new flat-screen TV you want, or trading in your car and getting a higher payment and putting yourself in even more financial strain. If you have a long-term view and something rough is happening at the office, you're not going to flip your boss off and make things even worse. You're going to say, you know what? I can handle imperfect people. I'm going to be the most worthwhile, valuable employee at this company. I'm going to keep investing and making this place a better place. And in time, you'll get your reward. So that's one aspect. Secondly, the things that we go through that are hard, if we learn lessons from them and we find a way to be focused on other people, we become more valuable to them in the marketplace.
Yeah.
So I would say the tough things that happen in your life, use them to grow. Use them to develop better character. Use them to learn more about other people that go through blitzes. Maybe you'll even build a business that helps people face their challenges. So, financially, it's tough when you don't have a job. It's tough when you don't get paid enough. But if you take a short-term view, you're going to do the worst things in that moment, and you won't really recover from it and turn it for good.
You know, many professional athletes seem to flounder after retiring from their sport, and the savings, what little savings they typically have, is quickly squandered away as they try to figure out where to carve a second career. Do you have any advice for them?
Yeah, I went through that. The key for me was kind of interesting. I had been a backup quarterback a lot, and I didn't like being a backup. I wanted to be a starter. My goals were to be a starter. But I used the off seasons to do things in the community, mostly speaking and working in some nonprofits. I got an MBA and opened up more options for myself. So that was maybe 3 years worth of part-time classes. So I invested in myself to prepare for life after football. And I also like to use the off season because I knew football was a great platform and I wanted to influence kids. And so eventually I got into the field of strengthening families as the best way to help kids. So, I mean, it was somewhat of a help to me that I didn't view myself as such a superstar, that my off season should only be autograph signing sessions and, advertisements. You've got to use your off season, and you got to realize your identity is not as an athlete. I was a person that I knew God made me, and I was a human being. I was a husband to Stacy, a father to my boys, and my identity was wrapped up in my character, my relationships, and that love, as opposed to, am I a quarterback, am I a starting quarterback? Those things can move away, and a lot of athletes struggle greatly when their identity as an athlete goes away when they're, kicked out of the league, so to speak. And then they struggle in relationships and their own personal confidence, et cetera. So a lot of it has to do with your identity in the first place. We aren't how much money we make. We aren't the position we are in the company. We are a human being with key relationships, and hopefully we'll realize that, there's a creator that made us and loved us, and that's where we gain our identity.
Do you think today's NFL is different than the league you played in with respect to the off-field annex? I'm thinking of Johnny Manziel, the Heisman winner and Cleveland Browns draft pick, whose celebrity lifestyle has basically ruined his sports career. I mean, what kind of advice would you give him something like that?
I think probably one of the biggest crises in America is evident in the NFL, but I think it's even broader outside the NFL, and that's there's a crisis of identity in men. We don't really, Margaret Mead, the renowned anthropologist, said the number one role of a society is to give its men a script for how to live. Women more naturally will figure out that life is about relationships. If they have a child, they'll more naturally be maternal and care for that child. but men need to have a path laid out for them. That's why training men to be men and having your dad in your life is so important. And unfortunately, in so much of America, including in sports, a lot of guys don't have a dad in their life that's given that role model. They don't have a group of guys training them in what responsibility is and how to use their strength to protect and bless others. I mean, wouldn't it be awesome if all men use their strength to protect and cherish women, to mentor orphans and children, and we protected the weak and the vulnerable? No one would think that men are any less masculine for that. They'd actually see a true picture of masculinity versus the guy that says it's all about me. What can I get? How much can I impress people? So the challenge, I'm not down on any individual person like Johnny Manziel, but maybe the role models of this nation and the role models of our families are not adequate. And we need to rebuild a concept that real courage is to know how to say you're sorry, to know how to forgive. Real responsibility is carrying yourself in a way that isn't a damage to others or to yourself. And the NFL, I think, has an opportunity to start training in that manly character, and I would hope colleges would as well. And the NFL can give a better picture. We certainly do it on the field. Guys are humble, they're servant, they're sacrificial, but then off the field, we don't act those ways, and that's what gets us into trouble.
So who said this quote? It's not always about the big game. It's about the people who raised us to play in it.
I don't know who said that. That's a good one.
It was actually on one of your articles back in February of 2014. And you were talking about Peyton Manning, Russell Wilson, Richard Sherman. Each one of these guys had very strong fathers who helped them become great athletes and great men.
Oh, yeah. I wrote an article about the Super Bowl and how it was remarkable that Russell Wilson's father, who'd passed away, was still influencing him because he had trained him with a vision for discipline and responsibility and greatness. And Russell really lives because of that influence of his dad. Peyton Manning's dad, Archie, raised some quality kids that really are great men on and off the field, and, of course, remarkable champions on the field. So the bottom line of this book is to be successful in life is much more than money or position or fame. It's relationships. It's teamwork. It's other-centered serving. But the interesting thing is when you have good relationships and you honor other people and you meet their needs, when you act like a servant, which some of the greatest leaders in history have, and Jim Collins in the book Good to Great lays that out, humility is a characteristic. When you do those things, when you're team-oriented, great results end up happening, at least in the long term, and you'll also have success. But it'll be a success that you can enjoy because there's people you can share it with.
You know, your late father, Jack Kemp, was known as the father of supplied-side economics, and he was also the congressional sponsor of Reagan's big tax cut bill, and he was an NFL quarterback just like you. Do you think politics might be in your future?
You know, I don't know. I put it off for a long time because I was busy raising my kids. A congressman in Seattle asked me one time if I'd run for his seat. And I asked, why aren't you running, Congressman John Miller? And he said, well, we have a 3-year-old son, and I really want to be there for him. I want to spend time raising him. And I said, well, you could take your reason and multiply it times 3, because I had 3 sons at that time. And we ended up with 4 sons. I still respect my dad and the way he did his congressional service and his time at Housing and Urban Development. He was a statesman. He didn't put his party first. He put the nation first. He knew that he wasn't the product. The ideas were the product. And there weren't opponents. There were enemies. They were just opponents who had ideas that weren't as successful as his, and he'd be willing to debate you for them. And so I commend anyone in government who sacrifices time and energy to serve our nation. It's not easy, and it's not set up all that well. But I have a job right now that is a servant job. I get to strengthen marriages. I get to help men discover their identity. I get to help families find out how they can be more loving, more forgiving, more committed. And in that sense, I feel like I'm making a difference, and I love doing it. I work at Family Life, and we see many, many marriages turned around each year, and many, many parents find ways to really build into their kids' lives.
You know, I want to thank you, Jeff. To everybody out there, you need to get his book, Facing the Blitz, 3 Strategies for Turning Trials into Triumphs, and it's on Amazon, right?
Yeah, it's on Amazon, and I have two websites that'll help people. One is the book website, facingtheblitz.com, and the other one, anything related to families, go to familylife.com, and you'll find marriage conferences that can really give you a boost or turn around a struggling marriage. There's always hope, is my view.
Thanks so much, Jeff. When we get back, we're going to be talking about de-dollarization. This is Dawn Bennett, and we're back. And I want to talk about de-dollarization because it's continuing. We had a guest on at the beginning of the hour, Derek Scissors, and we were talking about this new infrastructure bank, AIIB is what it's called, that was set up by China. And I just have to tell you, Vladimir Putin actually called for a Eurasian currency union this past week, and it clearly demonstrates that the Russian president is aware of the fact that we're kind of stepping into this unipolar world of the 1980s, where things are not exactly on balance. Now, Putin's Security Council also made it clear this week that the Kremlin is aware of this, and their sole aim is to really get rid of the Western hegemony that's actually taking place in our world today. And I have to tell you, they've decided they're going to actually back a Russian bid for membership in China's Asian Infrastructure Investment Bank. Again, that's AIIB. And I continue to wonder if this really is about de-dollarization of the world now, where we won't be the international reserve currency in the next couple of years. It's something to think about. And again, as much as Russia may not be considered one of our allies, South Korea is. And they threw in their support again for this past week. They were talking about it, and now they're behind the venture. They announced it this past week, and they actually conceded that not joining AIIB was actually not even an option if Korea wanted to maintain its influence in the region. So a lot more people are seeing it that way. Listen, to make a long story short, everyone but the U.S. and Japan are now on board. And quite frankly, Japan is still seriously considering a bid. So this question now is not whether de-dollarization is progressing or whether a shift away from U.S.-denominated multinational institution is in the offing, but rather whether China will be aggressive about using AIIB to begin a push towards the yuan hegemony. And what that means is, will they become the international reserve currency of choice, which, of course, would displace us, the U.S. dollar? Again, Beijing, of course, is playing down the idea that it's going to use the new development bank as a means of advancing China's global footprint. But actions speak louder than words. And as we talked about earlier with one of our guests, even the White House is very concerned about it. So you've got to wonder. And if that really is the case, is fiat currency is still going to be as important as it is today, or it was 10 years ago or 15 years ago. So I say to everybody, consider adding gold and silver to your portfolio. At Bennett Group Financial Services, we actually developed this part of our business because we had so many listeners request for us to do it. Many people out there, many places out there, when they buy silver and gold, it's very expensive. We reduce that commission cost to as low as we possibly can to make it easy for you to have and cost efficient for you to get access to gold and silver coins or bars. So if you have any interest in that, give us a call at 866-286-2268. Again, that's 866-286-2268. And one of the Bennett Group associates can talk you through the process of purchasing gold and silver. And remember, this can be shipped to your home, your personal residence, or a bank of your choosing, or we can help you choose a top-tier bank that can store the metals for you for a fee. So again, if you have any interest in purchasing gold and silver coins or bars, just give us a call at 866-286-2268, and we'll be happy to help you as de-dollarization appears to continue to be going on throughout the world. And I don't want you to be surprised or slapped upside the head not knowing what's going on. As well as I want to remind everybody, we are still having a seminar on April the 2nd. The room is almost full. I think we have a couple seats left. So if you're interested in coming to dinner with me, it's chicken, steak, seafood, vegetarian, whatever you'd like. It's at the Capitol Grill in Chevy Chase, Maryland on April the 2nd. That's a Thursday, 2015. And again, you're going to need to RSVP because the room gets full very quickly, and we only have so many chairs and so many parts of the table to share with people. So give us a call at 866-286-2268. Again, that's 866-286-2268. And we're going to be talking about the surreal and sinister markets of 2015. I mean, it just seems like our economy and the markets are impairing our living standards, not only now, but for generations to come. And I think that there's a way to get around that. You have to be prepared. You have to think a little bit differently. The United States, in my opinion, is still the greatest country in the world. But, again, I don't know if we're walking in, I don't know if we're being set up for something that's necessarily the best thing for us in the future. So thinking in the future, you need to take into consideration all options, and one of which is if we are going through de-dollarization here in the United States, that maybe you ought to set your portfolio up slightly differently and think of it in a different way, because I do believe that there's a false illusion out there that, the United States economy is doing well. I think a lot of people just honestly know that. They can tell that by looking at their lives and even looking at their company's performance. So if you have any interest in coming, we're going to be talking about the surreal and sinister markets of 2015, and give us a call at 866-286-2268. And you know what? That's all I've got. This is Dawn Bennett with Financial Mythbusting, where politics and the economy collide.